Motilal Oswal Nifty MidSmall Financial Services Index Fund. Will investing in this fund help you build wealth in the long run? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. But before analyzing this fund, let us first understand a few basic details about it. So as an NFO, it opens on 29th October 2024 and closes on 6th November 2024. And some of the key features of this fund are, it is an open-ended fund type which belongs to the category of equity, which is in sectoral banking, and it has Nifty MidSmall Financial Services TRI as its benchmark index. And the exit load for this fund is 1% if you choose to redeem it within 15 days. And there is no entry load, and the minimum investment amount you need to start investing in this fund is just 500 rupees. And the fund managers for this fund are Mr. Rakesh Shetty and Mr. Swapnil P. Mayekar. And according to the Riskometer, the risk involved in this fund is very high. And the primary investment objective of this fund is to provide returns to the investors that before expenses closely correspond to the total returns of the securities as represented by the underlying index, which can be subjected to tracking error as this is an index fund. Now, as we have a basic understanding about this fund, now let's take a look at the index it is representing. So Nifty MidSmall Financial Services Index tracks the performance of the mid cap and small cap stocks within the financial services sector. So the index includes up to 30 stocks which are selected from its parent index, which is the Nifty Mid-Small Cap 400 index, based on the stock's 6 months average free float market capitalization. So the weight of each stock in this index is based on stock's free float market capitalization. And this index can be used for a variety of purposes such as benchmarking fund portfolios, launching of index funds, ETFs, and other structured products. Now, if you take a look at the top 10 holdings of this portfolio, of this index, you can see the top 10 companies in this index are BB Fintech Limited, BSE Limited, Federal Bank Limited, HDFC Asset Management Company Limited, S Bank Limited, AU Small Finance Bank Limited, Sundaram Finance Limited, IDFC First Bank Limited, Max Financial Services Limited, Multi Commodity Exchange of India Limited. The highest weightage is given to the PB Fintech Limited by a weightage of 6.90%, while the lowest weightage is given to the Multi Commodity Exchange of India Limited with the 10th place by a weightage of 3.88%. And you can see from the statistics as on the data that the index returns as on September 30, 2024 is that in 1 year it has produced a return of 39.54%. In 5 years, it has produced a return of 19.88%, and since its inception, it has produced a return of 17.21%. So, as you can see from the graph also, that even though there are short dips in the short-term period, in long term, it has consistently performed well. Now, as we have a basic understanding about the fund as well as the index it is representing, let's move on to analyzing whether investing in this fund will be suitable for us or not by analyzing the pros and cons of investing in this fund. So, there are 4 key advantages to investing in this fund. Number 1, focused on financial services. So this fund is designed to give you exposure to mid and small cap financial service companies such as NBFCs, asset management companies, insurance firms, and more. So as the financial services sector continues to expand in India, this could provide significant growth opportunities to the investor. Number 2, growth potential of mid and small cap stocks. So by focusing on the mid and small cap financial companies, the fund offers the potential for higher growth compared to large cap financial firms. These companies are often in a rapid expansion phase, giving investors the chance to benefit from their growth trajectory. Number 3, diversification within financial services. So although it is a sectoral fund, it covers a broad range of financial subsectors, including lending institutions, insurance companies, and asset managers. So it offers some level of diversification within the financial services space itself. Number 4, low cost indexing. So being an index fund, it follows a passive investment strategy, which generally means lower expense ratio compared to actively managed fund. This makes it a cost effective way to invest in the mid and small cap financial space. So these are the 4 key advantages to investing in the fund. Now, as we have taken a look at the pros, let's take a look at the cons. There are 4 potential drawbacks to this fund. Number 1, sector specific risk. So one disadvantage is that this fund is heavily focused on the financial services sector as it is sectoral fund. So it's vulnerable to any downturn in the sector. So if the financial services industry faces challenges, the performance of this fund could be significantly impacted. Number two, higher volatility from mid and small cap stocks. So while mid and small cap stocks do offer growth potential, they also bring higher volatility to your investment portfolio. So these companies can experience sharper fluctuations, especially during markets correction period or economic slowdown. Number three, passive management. Number three, passive management limits flexibility. So this is also another potential drawback. So as a passive index fund, it strictly tracks the Nifty Mid-Small Financial Services Index. So there is no active management here to make adjustment based on market condition. So the fund's performance will follow the ups and downs of the index. Number four, not ideal for conservative investors. So the combination of sector concentration and mid-small cap exposure makes this fund riskier. It's suitable for investors with a high risk tolerance and a long-term horizon rather than those looking for stability or lower risk investment. So these are also another potential disadvantages you might get by investing in this fund. To carefully go through all the advantages and the disadvantages and see whether it will be suitable for you or not. So what is the final takeaway from our analysis? As you can see, the Motilal Oswal Nifty Mid-Small Financial Services Index Fund is perfect for those who want exposure to the growing financial services sector in India with the added growth potential of mid and small cap companies. However, it's best suited for investors who can handle the sectoral risk and also the market volatility in exchange for the long-term gain. So it's obviously up to the investor to see whether it will be suitable for them or not. But our personal opinion is that if you are someone who is a conservative investor and you're not at all willing to invest in actively managed fund, then an index fund like this might be suitable for you. But even then, if you compare this index fund to other index funds, similar index funds in the market, there are funds which has lower expense ratio and a lower tracking error compared to this index fund. So if you do want to invest in an index fund, invest in an index fund which has a lower expense ratio and as well as a lower tracking error. And if you are someone who is able to take risk and you want your investment to beat the market, then actively managed funds would be more suitable for you because they have the potential to deliver higher returns compared to an index fund, because an index fund, good or bad, will only try to replicate the index as much as possible. It will not try to beat the index itself. But in the case of actively managed funds, through active stock selection and as a fund manager actively going through the process of managing the fund, there is a higher possibility of earning returns that can beat the market itself. So if you are someone who's willing to take such kind of risk, then definitely go for actively managed funds. And our final takeaway is that if you're someone who doesn't have much knowledge about the stock market, and if you do not have the time to research about it because your life is already so hectic, then you should consult with a professional financial planner who will be able to give you the professional guidance and see whether the fund you want to invest in has a suitability of the investment objective, the risk profile, overlap ratio, allocation with your investment portfolio, your goals, and aligns with your risk tolerance, and whether it will help you to achieve your financial goals in a more faster and smarter way. But definitely getting help from a professional would make the entire investment journey for you more simplified and hassle free for you and helpful for you in the long run. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.